Hello and welcome to SRA Accounts Rules Compliance. This is part 4 in our webinar series looking at the role of the COFA. My name is Jenny and I'm joined by my colleague Faye. Our contact details are on the screen if you have any questions about this webinar, which covers what is a COFA, the role of the COFA, compliance plans, meeting your responsibility as COFA, and recording and reporting material breaches.
What is a COFA? A COFA is a compliance officer for finance and administration. A COFA must be an individual who is an employee or manager of a practice, is of sufficient seniority and in a position of sufficient responsibility to fulfil the role, is approved by the SRA for that role, and has consented to undertake that role.
The role of the COFA. COFAs are required to take all reasonable steps to ensure compliance with the SRA Accounts Rules, keep a record of any failures to comply with the SRA Accounts Rules, and to report any material failures to the SRA as soon as reasonably practicable. There is no need to report non-material breaches, but you still need to keep a record of them. A pattern of non-material breaches may constitute a reportable breach. This doesn't apply to ABSs, where there is a statutory requirement to report all breaches under the LSA 2007.
In the SRA's view, the COFA needs access to all accounting records, to carry out regular checks on the accounting systems, to carry out file and ledger reviews, to ensure the reporting accountant has access to all information needed to complete the accountant's report, to take steps to ensure breaches of the accounts rules are remedied promptly, to report all breaches which are material either on their own or as part of a pattern to the SRA, and to report the practice if it's in financial difficulty. The COFA must monitor, review, and manage risks to ensure compliance with the SRA accounts rules. You also need to have a compliance plan, a job description for the COFA, a backup plan for an emergency COFA, and possibly separate insurance cover.
As Faye mentioned, you need to have a backup plan for an emergency COFA. In case of short notice departure, such as sick leave, you must contact the SRA immediately at complianceofficers@sra.org.uk. The SRA will inform you of the next steps and send a link to a nomination form. Don't forget that the COFA needs a written appointment, job description, as well as terms and conditions.
10 things you should have done as COFA, according to the ILFM's legal abacus, are dealt with surplus client monies, got to know your COLP counterpart, understood the top 10 risks of non-compliance, recorded your consent and the firm's agreement, carried out file reviews and documented findings, been on top of cash flow, had in place an active breaches register, organised training and fee earner enlightenment, reviewed your accounting systems, policies and procedures, and kept up to date. 3 other things that we think you should think about include warning all staff about fraud risks, checking any new employees, and checking for instances of acting as a bank.
As COFA, you also need a compliance plan. The practice needs to maintain an outcomes-focused regulated compliance plan, mainly for the purposes of the COLP, but it will include sections that are relevant to the COFA. It needs to demonstrate procedures in place to satisfy relevant outcomes. For the compliance plan, the key areas to be considered are the COFA's role and appointments, finance governance structure, equality and diversity policy, the SRA Accounts Rules compliance and reporting, financial stability, business continuity and disaster recovery, and risk management.
So, what does the COFA need to do to meet their responsibilities? COFAs are responsible for implementing and overseeing systems for compliance in relation to the accounts rules. This should include the following: bank reconciliations. Regular reviews of client and office bank account reconciliations should be performed. Per Guideline 5.4, a manager or the compliance officer for finance and administration should check the reconciliation statement and any corrective action and ensures that inquiries are made into any unusual or apparently unsatisfactory items or still unresolved matters. They can delegate this to a manager, but ultimately the responsibility does lie with the COFA.
Payments. There must be a system in place to ensure there are controls over payments from client accounts. There must be limited signatories on the client accounts, and the COFA or an appropriate person must sign off on all payments made from the client account. Signing a copy of the report or emailing a confirmation is good evidence of this. We would also recommend that the COFA ensures that checks are performed at least weekly of matters with funds available on the client ledger and outstanding invoices or unbilled paid disbursements on the office ledger to identify instances where funds earmarked for costs have not been transferred.
The COFA should also undertake client file reviews. These should be performed on a regular basis. You should consider looking at new fee earners and partners first. There's no need to focus on files with known breaches if they were reviewed at the time. Reviews should be documented, perhaps use a checklist. We've got an example. We have seen some firms outsource file reviews, but the ultimate responsibility for this still lies with the COFA.
The COFA must also regularly review all client ledgers. This will help identify residual client balances which should have been returned to clients upon the completion of their matters, any suspense balances which have been held for a long period of time, any missed postings, office ledger credit balances, or overdrawn client ledgers.
Other suggested systems and controls include appropriate checks on new staff or contractors, a system for ensuring regulatory deadlines are met, and ensuring that duties to clients and others are fully met even when staff are absent.
What does the COFA need to do to meet their responsibilities? By performing the suggested tasks, the COFA should ensure that they pick up breaches. Whilst not all breaches will be picked up this way, having strong controls in place will help to prevent them from occurring. You will also have to rely on members of your finance team to report any breaches they note to you as the COFA. Next, we'll look at what you do if breaches do occur.
As mentioned previously, the COFA is required to record all breaches and to report all material breaches to the SRA. The question is, what is material and what is not material?
You must consider the detriment or risk of detriment to clients, the extent of any risk of loss of confidence in the practice or in the provision of legal services, the scale of the issue, the overall impact on the practice, its clients, and third parties. Remember, a single breach may be trivial, but if part of a series of breaches, then it may be material. As an aside, the SRA are moving towards the concept of serious rather than material, but when we asked for an example, they couldn't give us one.
Our guidance as to what constitutes a material breach would be to consider whether the breach was an innocent mistake, was it an isolated incident, was it discovered promptly and corrected, was the error for a trivial amount. If yes, then provided that there is no loss to any client, we would normally class this as trivial and would not report it to the SRA in our accountant's report.
How do we report material breaches? Material breaches should be reported straight away. The COFA should document that the breach was reported and retain all correspondence, including receipt confirmation from the SRA and any response. The SRA has a dedicated email address, which is report@sra.org.uk.
What about non-material breaches? All practices should keep a breaches register. All breaches noted either by account staff or the COFA should be documented here. This should then be reviewed regularly by the COFA, and any material breaches should be reported to the SRA. Remember, non-material breaches can become material if they happen all of the time. On screen is an example of our template breaches register with all of the information we believe you should record. By using an Excel spreadsheet, this will allow you to sort the data and identify whether the same breach reoccurs again and again, or whether there is an issue with a particular office or individual.
As COFA, you're also responsible for considering any financial difficulty for the firm. You must notify the SRA promptly of any material changes to relevant information about you, including serious financial difficulty, action taken against you by another regulatory, and serious failure to comply with or achieve the principles, rules, outcomes, and other requirements of the handbook. There has been some confusion over who the responsibility for this outcome lies with. It was initially thought that the COFA was responsible for ensuring the practice has sound financial management systems and for reporting any compliance failures. It has been clarified that this is not the case. The COLP and COFA guidance on the SRA's website confirms that responsibility for compliance with Outcome 10.3 lies with all those covered by the handbook. In practice, ultimate responsibility and accountability for compliance here will lie with the entity and its managers.
Thank you for listening. Please keep an eye out for our next webinar, which will cover the new rules which come into force in April 2019. Our contact details are on the screen, so please do get in touch if you have any questions.